Direct Line is a fantastic success story. They started from scratch in the UK in April 1985 with a single product, car insurance, and just one way for customers to buy, over the telephone. Today, Direct Line insures 1 out of every 6 cars, holding 19% of the total car insurance market share in the UK. If we look at the financial highlights of the company, it tells us that the company is in a quite stable condition. Out of this profit, 261.8 million came from car insurance, which clearly tells us that the core business of the company is car insurance, which this analysis will be based on. It is very difficult to find a certain strategic group for Direct Line's car insurance. Because of the internet and the possibility to compare different insurance policies is easy on pages like GoCompare.com or CompareTheMarket.com. Direct Line competes with all other insurance companies, even with those who belong to Direct Line Group, as well as Churchill, Greenflank, among others. In order to differentiate the car insurance providers, we decided to look at the quality of service and cost as a criteria. According to our research, Direct Line falls into the group of high quality of service providers, and it's comparatively expensive than most of the companies. The key players of the group which Direct Line falls in are Admiral Insurance, Swift Cover, and Hastings Direct. We have used style analysis to examine the environment of Direct Line's strategic group. With recession, a car is getting more and more of a luxury good. If the economy is bad and buying power of the people sinks, people could stop using their cars. Fluctuation of interest rates and constant rise of oil prices is a major future environmental threat of all companies operating in the market. Growth of GDP is expected to rise in 2014 by 2.8%. This will have a good impact on the industry as people have more disposable income, resulting in more cars and more insurance policies. Last year, UK had the most number of whiplash injuries resulted due to car accidents, but insurance companies had to pay a lot of money in their compensations of injuries caused to drivers and the passengers. This happening again will be a great threat for insurance provider. The population in the UK is growing very quickly, and this growing population has a positive impact on the industry, as it is expected that if there are more people, there will be a need of more cars, and more cars means more insurance policies. The law says that every car on UK streets need to be insured, so there is definitely no direct substitute for car insurance. By considering all the factors mentioned, the legal factors are an advantage to Direct Line, because by law people are obligated to buy car insurance policy if they want to drive a car. In long time we see a negative impact on the market considering the economic factors. Rising oil prices and fluctuation of interest rate will make the business harder than it is now. However, because of the GPE rising strongly in 2014, the market could stay flat or even improve in short term. Next, we will look at Porter's 5 forces and how these factors affect Direct Line. Threat of new entrants. The average entrepreneur cannot come along and start a car insurance company. It is hard for new companies to enter the market because they need to earn trust of customers, something that Direct Line have earned during their years within the industry. As insurance is an intangible good, their customers can only measure it through experience. In conclusion, we would say that there is not much threat of new entrants. Even big names from the other industries like Asta and Tesco fail to compete with the key players of the market. Power of suppliers. Insurance is a type of service where we do not need any tangible goods, so there is no need for any suppliers. Suppliers don't hold any power on the companies. Power of buyers. They have great power as they can easily switch as there is a lot of options in the market. There is no or very low cost of switching. This gives buyers the power to force down prices. In conclusion, the buyers have a strong bargaining power. Availability of substitutes. There is no direct substitute to car insurances, as a person is not legally allowed to drive a car in the UK without having it insured. Therefore, a substitute would be a different form of transportation, like taking the bike, tube, bus, or taxi. Intensity of competitive rivalry. We can also see that there is a high competition because of the internet, where customers can easily compare. Key factors for success. Direct Line is operating in an oligopolistic market where all the insurance providers focus on the quality of service when engaging with customers rather than just competing in prices. As car owners need to get an insurance, companies don't need to convince them to get a car insurance. They need to convince the customers to choose their car insurance. So the key factors for success will be an easy access for customer, excellent service, and appropriate pricing. Now we will have a look at the SWOT analysis. Strength. With a market share of 19%, Direct Line is the market leader in the UK. There is a high brand recognition because of the logo and long tradition. Moreover, Direct Line is one of few insurance companies providing free breakdown cover with the policy. Weaknesses. Direct Line sells their insurance only via telephone and internet sales with limited communication ways of the customers. They do not provide insurance to go abroad. In addition, Direct Line is more expensive than other competitors and not easily accessible at the best times. Opportunities. An opportunity would be to expand into the European market. Britain's GDP is predicted to grow by 2.8% in 2014, which is a positive sign in general. Being the market leader, Direct Line could offer premiums and discounts for existing customers to strengthen their relationship. Threats. The increase of online competition and a rise in oil prices, as well as a high number of bogus claims. For example, last year, UK was recorded to have most number of bogus whiplash injuries claimed by drivers and passengers even in case of minor accidents. In conclusion, to overcome the future threats of rising oil prices and the decline in the target group, Direct Line should strengthen the brand loyalty in offering special premiums for the customer. It is important that customers stay satisfied and that Direct Line can keep its major customers like Tesco, leading banks, and especially the major car manufacturers by offering them their rare breakdown policy. This is a key to success. Regarding the generic strategy, we have discovered different facts, which indicate that Direct Line has chosen to be differentiated. When Direct Line entered the market, they started by selling the product via telephone. Actually, the telephone was the most efficient communication channel to use in 1985. Moreover, by choosing the telephone as the only communication channel, Direct Line made it very easy for customers to buy their insurances. In addition, the telephone differentiated their company from their competitors. Today, Direct Line is the market leader with 90% market share, being more expensive than their competitors but provide excellent service. A reason behind their success is the fact that the company uses efficient communication channels only, as they also decided to add the opportunity for customers to go via the internet. Regarding the excellent service, Direct Line is one of few companies in the business which provides free breakdown cover in the UK. Future challenges. Direct Line should stick to its business strategy of being differentiated and providing excellent quality of service like they are doing now. The company needs to cope with the situation of constantly rising oil prices, which is making cars more and more of a luxury good, which means that if the number of cars decreases, the amount of insurance policies sold would decrease as well. Direct Line should extend its growth within Europe and also consider expanding to markets like Middle East and Asia. Another challenge Direct Line needs to face is to improve its telephone service. In order to stay competitive, customers must not have to wait as long as they do at the moment when trying to reach the company during busy hours. The current position to face the future. Despite of all their challenges and strong competition, we would say that Direct Line is in a very good position to face the future, as they have a very good reputation and 1.4 billion of money in reserves.